Good morning. Good morning. Welcome to another pre-market live stream. I would like to tell you I got good news, but oh my god, this was so bad. Morning all, welcome. Stack, Rich, Taurus, Calvin, Soccer. Good morning. Another disastrous CPI report. This is actually not good news. I'm not gonna stop here. I might make a video in the afternoon about CPI, but core CPI 0.6%. Look at that, above expectations. So this annualized is 7.2% core CPI, excluding food and energy. This thing is ingrained. Like inflation is really ingrained right now. Yeah. If we hold on, we're gonna be able to buy at cheaper prices though. CPI year over year. I was expecting for the market to rally like a 0 here, 0.0, and like a 7 here at the front. I said, all right, if this happens, market is gonna go to the moon, meaning it's gonna go up, right? But look at that. This is a surprise. This is a surprise for me. I never thought we would have such a miss, and it's shocking. The markets are being selling off big time. Okay, let's go to the dollar. Right, so we did have CPI. Initial jobless claims is shadowed by the other news. Crude oil inventories, we do have them today. And federal budget balance is going to be shadowed by the CPI news. Okay. Yeah, that's what I'm saying. People are not panicking yet, or they're gonna get screwed big time. Yeah. All right. So look at the dollar. Yeah, the dollar was dropping. We did have a reaction to the upside big time. Like we were negative probably 1%, less than 1%, and then we shot up probably to plus 6% or something, 5-6%. It's not breaking still this high. Okay, let's go to the lower time frame. So here's our setup for today. If we come back somewhere around this area, we need to see the price action because this happened in a very short period of time, probably 1 minute with the reaction. Yes. So this is a 1 minute candle, right? I want the dollar to at least hold this area here, my previous supply, 13.5, 13.4, right? Because I don't have anything here. This happened so fast. If this thing just break this demand, I do expect the dollar to come back probably to these levels, okay? We do have this pivot, but it's not very good. Nevertheless, it's coming from this demand where we had the explosive move here. And then it came back now during the CPI news, okay? So we might have some sort of retracement. I think the dollar might retrace up to this level so we can go back and short the markets, okay? Now, this is a 1 minute chart. I don't rely on the 1 minute chart for my day trading. I want to see the 5 minutes, okay? All right. The momentum is down. I understand that, but we are finding demand. So I want to short after a retracement. I don't want to just break this thing down. Take a breakout to the downside, okay? Or at least for me. All right, finally, we're breaking out on the 10-year yield bond. Oh my God, 4.03. I think these are levels from These are levels from 08, 2008. Okay. This is the sharpest move on bond yields, I think, in history, or at least the last 60 years. Let's go to the VIX. Yeah, the VIX is incredible. I really do not understand this chart. I thought that we could have higher rates with the news, but no. Look, still holding right there. Still holding. A lot of investors are either buying puts or yeah, buying puts, and if the market really drops big time, they're gonna be hurt. Nice trade though. Nice trade. Good. I think we will have plenty of opportunities today. All right, so the VIX is a mysterious chart. Okay, that's this one tells me. All right, be careful with the demands. Okay, if we have a breakout, then yes, I think investor will start panicking, and some sort of liquidation drop we will experience later today. All right, let me see if this chart is not very. You guys see it better? Okay, cool. Nice. All right. Regarding CL, a lot of downward momentum. The lower probability demand failed. Let's see. We just tapped the other demand that I have here. Let's see what is the reaction later during the day. Obviously, we do have crude oil inventories later at 11, so that's something that is going to affect, right, this trade. The lower probability demand right now turns into sell area on the retracement. Okay, like this is a very good point where to sell. Okay, this area. So I want to monitor here. This is the high probability demand that I have. I know the momentum looks pretty ugly to the downside. Let's see what happens. Let's review the rest of the commodities, and they should be going down, right? And that's kind of like obvious because of the dollar move. Let's put the daily. Right, let's take the drawing off. So gold going down 1%, silver coming down 2%. Now, copper is coming down 1.5%. So that's good. Lumber, I do have delayed data. So this is yesterday's. I don't have real-time data. Okay. Now, commodities, these two charts like copper and lumber tells me that inflation might come down. Like they're coming down, but I don't know. Inflation reports still very sticky. All right, let's go review the ES. So here we'll have some trade opportunities. At this point, I do think our target on the ES must be 3,400. This is the pre-COVID highs. It's merely 5% below. Let's go to a lower time frame. Right? Obviously, this is the drop from CPI, but I think this pivot, this collection of pivots are very good for us today. So we do have the Sundays, the weekly low, and then yesterday's and Mondays. Okay, this is Monday, Tuesday, sorry. Okay, and yesterday's here. So if prices come back to this level, 35.85, it's not very likely 60 points above, probably not today, but we will see a price action within the 35.42. Within the 35.42, if I have some divergence or the dollar hitting some demands, I might short here. Okay, look, I short the Nasdaq, but the same zone is represented here in the ES. So I'm watching the ES at all times. Okay, so again, above 35.42, above 35.42. If I have the dollar in demand and some either divergence on the tick chart or a trend on the tick chart, right? I was short above 35.42. Now remember, this happened in 1 minute. Incredible, like 35, 25, 100 points in 1 minute. Okay, this is all because of the CPI. And there is no zones where I can rely here on. Okay, so I will need to see price action, some formations be created real time, and then short it from there. If I don't have the dollar in demand, I wouldn't short this thing here. Okay, I need the dollar in demand. If the dollar keeps going up, I have no room to short. But if you go to the lower time frame, there are some areas that we can spot, like all this consolidation. Let me put the drones back up. There you go, right here. 13.5, 13.4. It's been touched right now, and it has some sort of reaction. You guys see? So here's where I want the dollar. I want the dollar in this area when I'm shorting. Okay. It's setting up pretty nicely for a drop on the opening if we have the dollar here during the opening. Okay. All right, let's continue on. Let's see the same area in the NQ. So the NQ is hitting some demands right here. Now the momentum is incredibly strong to the downside. So what I want to do is the same thing that I did with the ES, right? I will find a zone. After we open, I will wait for the dollar to be in demand. Look at the price action, some formation in the 500 volume bar, and try to short from there. Okay, so let's go down to the 30-minute. Same pivot. So this area is actually less probable. I will rely more on the ES chart to short the NQ. Why? Because the ES has this pivot like closely to this closely to this level, which makes it even more probable. Okay. Now I think the short today is going to be either even more probable in tech because of the rates and the dollar going in the same direction. Okay, if they were mixed, I would say probably other markets are going to be weaker, but the Nasdaq looks like it's going to be the weakest market for the rest of the day. And if you see here, this is a 30-minute chart, right? Let's go to the 5-minute. All right, so you have some consolidation here. We created this low here. So I'm going to compare this with the ES. And you guys notice the difference. So you do have one bullish candle right here. You have a neutral and neutral bullish candle, okay? It's not much difference for now. So that's what I want to look at the markets in real time. Which one is the weakest one, okay? It looks like the Nasdaq is going to be even weaker, okay? Because of the yields and the dollar. All right, so that's pretty much today. For me, I will be look. The Russell reached finally the demand. Now the momentum is brutal to the downside. At this point, I don't expect this demand to work, but the Russell hasn't broken any low yet from June. If you guys see, the June low hasn't been broken yet. Okay, so the Russell is outperforming these markets. Ultimately, it might be dragged by the other ones, right? Before we close this live stream, I wanna check on this chart. This is XLF, right? XLF right now is at pre-COVID highs, and I referred to this chart because tomorrow we start with we kick off the earnings seasons. So we do have J.P. Morgan Chase, I think Bank of America and Wells Fargo. No, Citibank and Wells Fargo reporting tomorrow. Three of the big commercial banks are reporting tomorrow, and that will give us a good information towards the next earnings season. Okay, so in XLF, which is the ETF for the financial sector, I do have a demand right here. So this is the demand, the last demand that I have before the consolidation during the COVID. And I'll tell you, during this demand, one thing that happened is that the Fed was aggressively stimulating the economy. Okay, I don't know if this demand is gonna work again with the Fed against, but nevertheless, this is the demand that I have. So we do have a lot of room to the downside. So my first demand, obviously lower probability than the other one, is this one. 2911 2784. So I do expect more weakness in this. That means that probably bank shares might have some room to continue to the downside. Okay, so this is XLF. I think is a very important chart to watch. This will dictate what the upcoming weeks are gonna look like. Okay, remember, banks are the first one reporting, and they will give us a broad outlook of what the earnings season is gonna look like. Okay. I don't know if you guys have any question. I was looking at the report itself. I didn't have time to go through it very like thoroughly, but look at this. Food again, 0.8%, 11% here year over year. Even food at home. Food at home is up 13%. Then you have steel fuel creating some upper pressures here on the inflation. New vehicles, 0.7%. This is amazing. Used cars are giving up some of the giving some relief on the prices. Okay. Shelter, 7%. Transportation services, wow. Airlines and stuff, 14.6%. Yeah, I'm gonna go through this report later today and see if I can make a video around this. All right. So with that, I'll see you guys in 10 to 15 minutes. Let's prepare for the trading session. Okay. See you guys. Thanks for being here. Bye.